All right, now that we know how to define the long-term trend, we're going to look into classical technical analysis. All right, so classical technical analysis is the primary charting technique we use at MacroOps when determining what trades to take in our global macro process. So classic TA comprises of trend lines, support and resistance, cups, and you use these various trend lines, support, resistance, and cups to form chart patterns. And then when these chart patterns form, these little congestion patterns, we look to buy or sell breakouts out of these patterns. So first off, what is a trend line? Now you can see here I got Apple pulled up. A trend line is an upward sloping line, okay, that you draw so that it lines up with the major swing lows of an uptrend. It's pretty simple. All right, so you can see this longer term trend here, major swing low, and if Apple were to come down here, it would hit another major swing low. Support is a horizontal line. All right, and that's where price, it's an area where price comes down, typically rockets off from. So you can see on the dollar index here, these two areas form support. This goes across and it defines our support going forward. Same thing with resistance, except on the upside. If price is knocking up on a horizontal price level, that we can identify some type of resistance. That's what it looks like here. And a cup usually forms from a V shape. So if we get price that comes down very fast and skyrockets back up, that is what a cup is. And a very common pattern after a cup is this right here, which is called a handle, a cup and handle. You can see the breakout happen right there. So we are looking for breakouts out of these support resistance zones or out of a trend line, and that is a signal that a new trend may begin. All right, and it's important too that we want to watch for closes out of these patterns. So on SPX, for example, this is a monthly chart. You can see here that the price closed above the resistance. All right, that's what we want to look for. And what we don't want to look for is wicks. So for example, we could draw a tiny support line here, and you can see these wicks got below the support, but price ended up closing above the support. That is not valid. All right, we're looking for closes outside of the trend lines or support and resistance lines.